And good morning. Today is November 21st, 2014. It is 11:15 Eastern. Market's been open for a little while. And let's talk about the market in general. So as you see over here, you'll see our market indicators are still very green. Now the caveat, we've been thinking that they were going to roll over the last couple of days, and they did. And they started to produce some lower highs and lower lows. But today we've had an upside reversal. Now, don't know how strong that's going to be. The market right now is up about 126 points. It was up 160 off the open, gapping up. Now, let me just show you something that we found statistically in our research that could be a problem for this uptrend. And it may not be a big problem, but let's take a look at it because we want to trade with the stats on our side. So the market is green, as you'll see, but you'll notice it's above this standard deviation level. And whenever the market goes up the standard deviation level, it tends to correct. So let's take a look here. Here's one spot where it came above the standard deviation level, and it corrected. Here's another one above this little line, standard deviation level, and then it corrected. Another one, it corrected. Another one, well, it went up for 3 days, but then it had a violent correction on the third day. Look at this one. Just touched the edge of it. And I can keep going back for you, and I will. And it doesn't always work, but statistically it's been working. So take a look. Here's another one right here. Touched that standard deviation level and corrected. And then if you keep looking here, this one, it broke above it and stayed above it for about 2 weeks. And this is the New York Stock Exchange average. So it could continue to go, but that's about 1 in 7 so far. This one broke above. Next day it came back down. Here's another one. It broke above. 2 days later, it came back down. Same thing here. Same thing here. So we're about 1 in 8, 1 in 10 actually keeps breaking above and going higher. Okay, here's another one. So now we're 2 in 11, something like that. So 80% of the time, here you go. There's another one that goes down, another one that goes down, and another one that happened to break above and keep going above. So when you take a look at it, you see that about, let's say, 75% of the time, and we can do the statistics that we want, but you get a feel, you get an idea of what the probabilities are. Now, there's not a lot of news right now going on in the market, and that's why the market seems to be going up. We had Ebola back in here that caused a lot of this problem, and then we had a big rebound after the Ebola scare. We got Vladimir Putin messing around. We got Congress not doing anything. So while all that happens, you see the market's kind of drifting up. But if there's any bad news that happens, and we might be due for that, especially up in this area, you'll see a correction back to the downside. Now, here's where we think it could go to the upside. Now, we think it's going to go try to test this level here, which is not that much higher. But that level is 1119 on the New York Stock Exchange. That's the previous high. Previous high is 11108, actually. So we want to look at that previous high because it's 11042. So it's got a little bit left to go, but if it doesn't break through this high on high volume, this could be the third test of that high area. See this test here? 1, 2. This would be the third test. If it doesn't do it on high volume, we think it's going to go back down to the other side. It's just something for you to be careful about. We are green, but we are at that upside above that standard deviation where things tend to happen to want to reverse themselves. So we'll keep an eye on it, and just want to let you know you've been hopefully nibbling away here as the stocks have been going up, and hopefully tightening your stops to protect those profits. And if the market does turn around and it does it in a violent fashion, then you want to be able to take your cards off the table and go home.